Good afternoon. I'll call the September 17th Finance Committee to order. And would you like to introduce the first agenda item?
Sure. If I have my right glasses on. Sorry about that. So, good afternoon, Chair Dominguez and committee members. I'm Jennifer Tomaszewski. I am the Treasury Manager for the Finance Department, and with me here today is Mark Sewell, the Accounting Manager. And together we'll be presenting the fourth quarter review. It's the preliminary review for fiscal year 2019. And before I go into the report, I did want to just remind your committee that these are preliminary numbers at this point. As we have technically closed the books, but we're still preparing for our annual audit. And up until mid-October, we're still posting adjustments and changes to the books. So these are preliminary numbers. Back in December each year, we bring the final numbers when we take the CAFR report and present that to your committee as well. And then in addition to that, Bob Samario will be bringing the results to the general fund reserves as well. And that'll be once the numbers are final. So for the presentation today, I'll start out with the presentation on the general fund revenues, and then Mr. Sewell will go through the general fund expenditures and then hit some highlights of the enterprise funds as well as some of the highlighted proposed budget adjustments included in the packets for fourth quarter. So this first table is it's a revenue summary broken up into three categories. We have taxes, other revenues, and fees and charges. And this is a comparison of our budget to actual, with a comparison also showing the results for last year as well. So the annual budget includes the adopted budget as well as any budget amendments throughout the year. And we see that we ended the year with an annual budget of about $155 million compared to actual of about $157 million for a net surplus of about $2 million. And we'll go through these individually on the next slides. But I did want to just highlight when we look at the change from last year, the 27% increase, that's related to Measure C. So fiscal year 19 was the first full year of receiving Measure C. In fiscal year 18, we only received 1 quarter's worth of that revenue. So we do see here that taxes are about a $4 million surplus, and we're going to see more detail on that on the next slide. So there's where that $4 million is. And we broke that out into more detail. So we have our sales tax, Measure C, property tax, and so on. And you'll notice that the main cause of that surplus is sales tax and Measure C. And you may recall that last year we ended the year with a deficit, and that's because the California Department of Tax and Fee Administration had some problems with their new software, so they had delays in processing sales tax returns. So when we look at those numbers this year, a lot of that is money that we should have received last year. And about 1.2 million of each of those, and I'm lumping them together and discussing them together because they both have the same drivers affecting the numbers. So if we remove out that prior year revenue, we're still in a surplus, still in a positive growth. And the majority of the rest of that relates to the impact of the state now enforcing online sales. So we're starting to see the impacts of that now. When we're looking at brick and mortar stores, we still see retail as flat, but flat is still better than a deficit, or a decline. And then we did see a bump in auto sales and restaurant activity. So it's really all of those combined resulted in that $4 million surplus. I don't want to go too much detail on the other categories because you'll see they're really close to budget. I did want to just point out with the UUT, we're still seeing a decline in cell phone taxes on cell phones and on cable. With cell phones, the carriers are continuing with the competition, so rates are, they're offering better deals to customers to keep their business. And then cable, we're seeing that switch from the traditional cable to the over-the-top television, or the Netflix and Hulu's, Amazon Prime. They currently do not pay UUT. That is something that is being looked at and may change in the future, but as of right now, those are the two main causes for that deficit. And then I did want to just quickly highlight the TOT. We see about a $88,000 deficit compared to budget. Still increased over last year. We were at third quarter projecting that deficit to be larger, but then in May and June we had good numbers in TOT. We don't know if that's tied to increased flight service out of the airport, but we'll be watching that. And then I did just want to again point out that we see the big change is because of the Measure C last year, only being one quarter last year. So that's it for the tax revenues. Did you have a question?
You said that restaurant revenues were exceeded expectations, and what was the other category?
Auto sales.
Auto sales. Thank you.
So the next category is other revenues. So we have licenses, fines and forfeitures, franchise fees, and so on. In total, they're very close to budget, but when you break them out into the separate categories, we see fines and forfeitures are down about $600,000. The main driver here is the parking enforcement. So this has been a trend for the last few years that the department struggled to fill those parking enforcement positions, or when they do fill them, they move on to other positions. I think on average, there was about 5 of the 13 positions were vacant throughout the year. So that's the majority of where you see this $600,000 deficit there. And then intergovernmental, that's mainly our mutual aid activity. That swings significantly from year to year. In comparison to last year, we see that it's gone down quite a bit, but really that's based on fire activity and the needs for mutual aid services. And then miscellaneous is kind of a catch-all. It's kind of everything else. There's some reimbursements, there's some transfers in, there were some donations that didn't come to fruition throughout the year, and some budgeted litigation settlement that wasn't received yet by year end. And I did just want to highlight a couple of the changes in compared to last year. Licenses and permits, it's not a big number, but the percentage was big enough. So I just wanted to point out last year we had a bump related to cannabis applications. That was one-time money. And then again, that swing in the intergovernmental from mutual aid activity from year to year. So that's it for other revenues. And then the last slide I have for you today is the departmental fees and service charges. So this is all the departmental revenues, and we see they ended the year about a $1.8 million deficit. And there's really two departments that make up the majority of that. Community development, that's really based on permit activity, what's going on in development, and any one big project can swing that revenue pretty significantly from year to year. So that fluctuates from year to year. And then public works, we see a deficit of about $760,000, and that's related to engineering. The engineering division, when there's vacancies, they're not there to bill on capital projects. Now with that, there is some salary savings that offsets that as well. But again, these are similar trends to what we have seen in the last couple years. So just to recap before I hand it over to Mr. Sewell, again, we're looking in revenues about a $2 million surplus at year end. And with that, unless you have any questions, I'll hand it over to Mr. Sewell.
One more question about the retail numbers. Are you able to see the retail numbers for different parts of the city? So, for example, do you know, is it different on State Street versus Milpas or San Andreas or Coast Village Road?
So that's a good question, and that is something we've been working on. We have a consultant who provides us the detail that really each quarter we meet with them, and we scrub through the details, because when the state pays us, they just pay us, we just get a check each month. We don't have a lot of the detail, but they do review that, and they do have a functionality on their they have a portal where you can go in and set up maps and look at the activity based in zones. And we're currently working on that. It's in development right now, so we have to provide them the maps, and then they can provide, then they have to go in and work with our IT department to get that created, and then we'll be able to run reports and see that. But right now, we don't have that. We're working on it, though.
Great, thank you.
Okay, thank you, Mr. Tomaszewski. Moving on then, my name's Mark Sewell. I'm the accounting manager for the City of Santa Barbara, and I'm going to take you through some of the general fund expenditures. And again, I'll just reiterate that these are preliminary numbers. They're still subject to change. They are materially where we think they're going to be. That's why we're here today and talking to you about them. But we will be back in December with a full report, comprehensive financial review of the audited accounts. Okay. So the first chart I'm going to show you here shows all of the different general fund departments and their amended budget, which would be the budget that was adopted and then adjusted by any carry forward encumbrances, namely contracts and purchase orders from the prior year, and any other approved adjustments throughout the year. And that you can see for the general fund is $166.9 million. And we are reporting at this stage an actual of $163.7 million, which then gives us a variance without encumbrances going forward of $3.2 million. That's important because that represents the actual spends at the end of the year, but of course we will then have commitments which we need to recognise as well and ensure that they are appropriately covered in the future fiscal year. That's the next column there of the $1,029,000. That's the value of contracts and POs which are being carried forward for a total of $2.2 million favourable variance in the general fund. So you can add that to the variance in the revenues and get a sense of how the general fund is performing. I then want to just pull out a couple of the different departments and give you the reasons why they are reported as they are. And the first one is Mayor and Council. You're actually seeing there that it's actually slightly overspent its budget in the fiscal year. And that's explained due to the area median income pay adjustment, which was applied in 2018. There's not a lot of costs that go through the Mayor and Council budget that are really discretionary. But one of the things that is loaded into that budget every year is the expectation to adjust salary and benefits in line with the area median income, which is something outside of our control, of course. However, when we do our budget for the city as a whole, we take global assumptions on salaries and benefits, and I believe it was a 1% assumption for the fiscal year 19. So when, in fact, just before we adopted the budget in last year, we actually applied a 7.71% increase to those salaries and benefits in the Mayor and Council department, which was obviously in excess of the 1% that was budgeted. So you'll see in the packet, there's actually a budget request here to transfer some salary and benefit savings from a different department to cover that shortfall. Moving on, I'll draw your attention to the fire department, which again is showing that they've spent more money than was budgeted. And this is in keeping with most recent years, and this is again related to the mutual aid activity. Of course, it's all reimbursable, and that's why we're seeing an excess of revenue. And this, of course, then means that it's the payment for those firefighters, most of the time on overtime, to go and actually support other agencies in fires outside of the city limits. And again, within the packet, there's a recommended budget adjustment to appropriate some of that additional revenue to bring the fire budget back into line. And then finally, I wanted to talk to you about the non-departmental line at the bottom there, which has a significant variance again. An actual spend here, how it's presented here, of $32.4 million. This is the program that we use to account for the transfers out of the general fund for various reasons. The main portion of this, about $22 million, is the transfer out of the Measure C revenue. So it's received as a revenue, and then we have to transfer it into the Measure C capital fund. So we show the in and the out in the general fund. So that's a big portion of it. And then the other big chunk of it is two loans that the general fund made in fiscal year 19, one to the airport department for $3 million and one to the Measure C fund for $5 million. And they are to be repaid over the next few years. And so that, again, is shown in this version of the numbers as an $8 million cost in the actual and within the budget. But the reason why there's a variance there is to do with the fact that Measure C tax revenue has been received higher than budgeted. And because it was received higher than budgeted, we need to transfer that money over to the Measure C fund. And therefore, there's an adjustment again in your packet to appropriate the additional costs required to transfer that excess sales revenue received, such that the Measure C fund is made whole and receives every single dime that the tax brought in fiscal year 19. Okay? And that's what it says on that screen there. So then what I want to just draw your attention to, and it's probably less clear to see this as it's shown, but I've just put in bold the balance of the majority of the other departments and just sort of cover them all with the same kind of rationale. You can see that the majority of these departments have savings at the end of the fiscal year, and they are primarily salary and benefit savings due to typical labour turnover and the like. Again, very consistent with what we've seen in recent years. And actually, as part of our budgeting process, we budget an amount of revenues in anticipation of this very thing. So we're seeing it come through roughly in line with our budgeted expectations in terms of those salary and benefit savings. So nothing to be alarmed by, very much expected. So that's the sort of whistle-stop tour of the general fund. I'm happy to move forward to the enterprise fund if there aren't any questions at this stage. Great. So then our enterprise funds, there's a couple of tables on here which bring out some of our major enterprise funds. And just to remind you guys and obviously those watching at home, enterprise funds are responsible for generating their own revenue to pay for their own costs and receive no general fund taxation support. So that's why on these tables we show you the revenues and expenditures on the same table, and then the difference between the two to show you whether actually there's been a surplus or a deficit in revenues in that trading year. So I wanted to draw your attention to the water fund and show you that actually in fiscal year 19, they were challenged to meet their revenue goals. And that kind of makes sense when you consider that there was quite a wet winter. And so therefore the demand for water to be used outdoors was significantly lower than it has been in previous years. And so therefore they fell short primarily on water sales during that period. Offsetting that, however, are some expenditure savings. And again, like most other large funds, they have a significant amount of the $4 million in savings as savings in salaries and benefits. And they also have lower than budgeted operating costs at the desalination plant. And some savings in legal fees and other areas across their profit and loss account. What you'll see when you compare them to the prior year is that revenues have actually declined $5 million and expenses have actually increased $15 million. So the net of that is actually a use of reserves of around $9 million in this year. The good news is that previous year they actually contributed about $11 million to reserves, so it's not like the fund is going to be insolvent in any way. It's just they've actually done slightly better than they budgeted to do in fiscal year 19. And there we go. The other major enterprise funds I wanted to talk to you about are included on this slide. And I wanted to again hone in on just one in terms of the airport. And while you can see that the revenue is actually only a 0.5% variance to budget, I wanted to just pull out that again. That's an 11.6% growth year over year in the airport, reflecting the benefit of the additional services that the airport has been able to bring on board. And again, like many other funds, a major contributor to the $1.9 million expenditure savings is salary and benefit savings there. They do also have some operational cost savings, and also they refinanced one of their bonds this fiscal year, which is giving them about a $500,000 benefit, which will also be felt in future years going forward as well. So the airport fund is looking in pretty good shape at this point in time. And that really is the end of the enterprise fund section. And I'm happy to move on to a couple of slides pulling out some proposed budget adjustments.
I heard news that the restaurant at the airport was closing. Would that impact these numbers significantly, or is that just a small part of the budget?
Chair Dominguez, the restaurant at the airport would be a reasonably small number in terms of the total revenue for the full airport fund. And I don't really know the full details about what the ongoing plan is with regards to the rent requirements for that operation. So I don't believe it will make a material impact on the fiscal year 20 budget.
Okay, thank you.
So moving forward then, you actually have within your packet, I think there are about 30 different budget adjustments. And that's, again, reasonably typical at this time of the year because as we get towards the end of our fiscal year, we are able to understand more of what's actually happened versus what we thought we were going to happen. And that leads to a number of what we call cleanup items to just make sure that all of the budgets are in the right place. Typically, we're not asking for any new money. It's just about moving things so that they are in the right bucket to reflect where the actuals have actually been spent. So what I wanted to do was pull out a main focus on the general fund, because I know that's one of obviously the main focuses for everyone. And what you see here are a couple of adjustments whereby, again, the impact is zero to the reserves. But the first one here is the recommendation to remove revenue that was received in excess of the budget for the Public Works Technology Fee, which is a slight premium on permits that go through the Community Development Department, to enable funding for future replacement of the software systems that enable the permitting system. So slightly more than anticipated revenue was received in the year, and so this adjustment simply moves that money from the general fund and puts it and ring fences it for that capital project in a future date. And then adjustment B, you see there is, as we discussed earlier, the impact of the excess mutual aid activity in the year. We have sufficient revenues to cover this request to ensure that the fire department has sufficient budget to have paid those overtime costs. So this appropriates $200,000 of the additional revenue received. Moving forward, you then see the adjustment I referred to with regards to how the Measure C sales tax is accounted for, with coming into the general fund as a revenue and then leaving the general fund as a transfer out to the Measure C capital fund, again ring-fencing those funds specifically for capital. And so therefore you see the $898,000. Just an aside, just in case anyone's wondering why that's not about 1.2 million, when we've heard that that's kind of the increase on that, 300,000 of this was already appropriated earlier in the year for the De La Guerra Plaza project to have a look at what the options were there. That's why that's now the remainder of that excess tax. And then the final adjustment I wanted to share with you, again, I mentioned this when we were talking about Mayor and Council. This is just a movement of appropriations from the City Administrator's Office to the Mayor and Council's Office to make them whole. And then finally, what you see here in terms of the capital is the other side of what we talked about. You get the $44,000 coming into the Capital Outlay Fund for future of replacement of Excella, and the $898,000 into the Measure C Capital Fund to make that whole. That's the end of the presentation. Very happy to take any questions, but hopefully the Finance Committee would be comfortable to recommend to Council that they accept the preliminary fiscal year 19 interim financial statements for the 12 months ended June 30th, 2019, and approve the proposed fourth quarter adjustments to fiscal year 19 appropriations and estimated revenues as detailed in the presentation and attached in the schedule of proposed fourth quarter adjustments.
Any questions? I have a question, and this is just a technical one related to the agenda. So our council agenda report has it termed slightly differently. Item B is accept the interim financial statement for the fiscal year ended June 30th, 2019. And we have March 31st in this PowerPoint.
Yeah, Chair Dominguez, I can only apologise. That's my error in not updating this from the previous third quarter reports. The recommendation we're looking for is for the fourth quarter, which would be at the end of June.
Okay.
I trust that shouldn't be anything more than an oversight, and I'll make sure that it isn't the case in future presentations.
For those scorers following along at home, then they would cross out March 31st, 2019 and write in June 30th.
Yes,
okay.
Please.
And then the next line is fine as is.
Yes.
That's correct. Fiscal year 2019. Okay. Do we have any public comment? Seeing none, I'll close public comment and I'll entertain any motions from the committee.
I'll move the staff recommendation.
Okay, all those in favor? Aye. That passes unanimously.
Thank you.
I just want to congratulate my fellow committee members. Since you've joined this committee, you've seen these great revenue increases and costs have been contained, so great work, team. Thank you, city staff, as well, for your excellent job at keeping us on track and keeping our budget healthy.
Thank
With
you.
that, anything else before I adjourn the meeting? Okay, thank you very much. Meeting adjourned.